Hello, so today we are going to talk about Warren Buffett's letter to its shareholder. So this is a 2024 letter. It was just published a couple of days ago, and I had good time reading it and wanted to share some of the things that I got out of his shareholder letter. Now, everything that I discussed today is not a complete version. It's a very small part of the letter, like some of the important things that are helpful for me. I picked those. So please don't see this as a substitute for reading his letter. I think his wealth of knowledge, we should really read every single word that he writes because as an investor, I think that can be a great tool for all of us. Now, those of you guys who don't know me, my name is Deepak and I'm a tax code advisor. So if you're looking for some help with your taxes, then you can certainly reach out to me via taxcodeadvisors.com. My firm provides a lot of value, not just that we help you file your taxes, we do consulting, we also can take care of your bookkeeping. We can also, do some strategic consultation with you, trying to figure out what are great ways for you to reduce your taxes. Or if you're thinking about getting into business, then we can certainly help you with that. Or maybe you're dealing with a large tax bill. Maybe you have those RSUs or some large capital gain or something like that. And we can certainly help you deal with those as well. So that's what I do for a living, and I deliver value whole year long, right? I do a lot of seminars, a lot of webinars, a lot of meetups, and I share a lot of value. So please, the way you can help me out is just by becoming a client. That's simple, and everything else I just give it away. All right. So number one thing is that Buffett is 94-year-old, guys. I mean, and he's still writing a letter. I mean, that itself is a big thing. He was on the stage. He was taking questions for several hours from people. That was just awesome. But first thing that he talks about is transparency. Then he talks about honesty, and then he talks about discipline. Some of the key values for Warren Buffett. And he said, look, if you as an investor, those are the values that you're looking for in a company. That are they transparent with you? Are they telling you the truth? I mean, these days, I don't want to name a company, but there's a major healthcare company out there right now. You take a look at their financials and they look wonderful. They've been doing very, very well for a very long time. And their CEO was shot in a broad daylight because obviously somebody was not happy with them, and later on the CEO died. But you look at that company's financial statements and everything looks very nice. But then I see so many people criticizing them, and then they're trying to go after them for criticizing them. Even Bill Ackman got involved in that. And I bring that up because such a great company, so many people depend on that company. Shouldn't they be more transparent as to what's happening? Why are people upset? Shouldn't they be sharing that story with their shareholders? I haven't seen that story. So transparency is so critical. And then on the other hand, then I see people who sugarcoat their stories. For example, their fundamentals looks really, really bad, but they tell such a good story that people get super excited. For example, I'll give you a couple of names. One name is Tesla, and another name is Palantir. You look at their numbers right now; they don't look that good, but their story is so compelling that people follow them. Now, is there something wrong with them? I don't think so, nor do I know of. I'm just saying, right? That if all the companies are transparent, we'll be able to make a better judgment call as to where we want to invest our money. Unfortunately, that is a luxury that we don't get anymore, right? Not every company is transparent, and I think Berkshire Hathaway has always been transparent because it is led by a man whose core value is transparency. So that's number one lesson that I got from Mr. Buffett here. So if we can find more, and not just companies, by the way, I'll say, people that you do business with, people that you hang around with, the groups that you participate in, the more transparent they are, the more um, integrity they have, the more honesty they have. When they make a mistake, when their portfolio goes up, they talk about it. When it goes down, they talk about it. When they like something, they talk about it. When they're wrong about something, they talk about it. So when you see people like that, then you go like, okay, now I get a balanced picture. But somebody's always, you know, looking at things one way. That's where I get a little bit scared. All right. Mr. Buffett clearly said that integrity in leadership is non negotiable, but I will say, unfortunately, we don't get that in many companies these days. We see people, cutting shortcuts left and right here and there. And, that's Anyhow, that's where Mr. Buffett starts out with his newsletter, and then he said that look, and he always brings back Charlie Munger, one way or the other, and you can imagine why. One of the greatest investor of our time, Charlie Munger's philosophy, was no thumb sucking. He used to say a, a lot of wisdom in less words, and that is very hard to do, but Munger was known for that. And he said, you don't keep on with the problems. You need to fix problems head on. You need to deal with them and you need to take care of them. And Mr. Buffett actually talks about an example of Geico, that how Geico was not really such a good company, but with a major restructuring, they were able to fix it. And I'll share some numbers about Geico just in a second here, kind of give you an idea how important they are to Warren Buffett. Then he kind of goes and talk a little bit about education, that a lot of people focus too much on education, but they are not really looking for those core values in people. Core values are perhaps even more important than the education, because you can get an educated people, and if they're missing those core values, if they're missing integrity, if they're missing that dedication, then they are not going to be successful. So he kind of gives an example of Bill Gates and many other people who are very, very successful without actually ever getting a degree from some prestigious school. Very critical lesson that he talks about is that one great decision can outweigh multiple mistakes. And I'll share an example of that from Warren Buffett just in a second here. But what he's saying is that you take a look at your portfolio today, it's probably red. I want you to go back and figure out of all of those, maybe you can name a one, two, or three companies that you own that are going to be a great winner over the next 10, 20, 30 years. That's what you're looking for. You're looking for, few big winners, and you're not going to get those winners just because, you know, y- uh, uh, like you look at thousands of companies and you just pick one. It's not going to happen like that. It's what's going to happen is you're going to pick 10, 15, 20 companies, and out of those 10, 15, 20 companies, you're going to be able to find maybe two or three winners. So the problem is, if you're not picking, if you're not batting, then your batting average is not going to get that good. Now, you don't have to take on every single ball, but you got to practice. And these days, cool thing is you can practice with fake money, although fake money doesn't have any emotion attached with it, so learning lessons are not as strong. But if you can practice even with a small amount of money, then you can see how your batting average is doing, and hopefully over time that improves. So here on the screen, I'm showing you some of the business segments of Warren Buffett portfolio. And if you take a close attention, you will notice that majority of the profits, majority of the earnings are coming from insurance investment income and underwriting income. You can see last year they were roughly about $15 billion, and this year they're almost $24 billion. I mean, that's a huge growth in that insurance industry. And that's what I'm saying. He was able to do that by fixing Geico. And he talks more about that just in a second, when he's going to start talking about his mistakes that he made at Berkshire Hathaway, and I'm going to share some of those mistakes that he talks about. Then he talks about, for example, railway. Not much. It was 5 billion last year, still 5 billion. Energy business is doing very well. Last year was only 2.3 billion. Now it's 3.73 billion. So that's a good one. But all the other businesses, they're not really doing that well. In matter of fact, most of them are actually losing money. And Buffett recognized it. You'd be surprised to know that Mr. Buffett now owns, or Berkshire now owns, 189 fully controlled businesses, like fully controlled. And if I'm not wrong, half of them are actually losing money. So can you imagine you own 189 properties or 189 small businesses and half of them losing money, and you are still known as the greatest investor of all time? That's the beauty of Berkshire Hathaway. All right. Um, he talks a little bit about how insurance companies work, but I'll leave them alone for a second. But uh, this is the critical part here. Mr. Buffett versus other CEOs. From 2019 to 2023, Buffett admitted mistakes or errors 16 times. Okay. How often do you see that word used in other companies' shareholder letters? Most CEOs, most companies don't want to admit their mistakes, especially if that CEO is older. But here, Berkshire Hathaway is admitting their mistakes multiple times, not one time, multiple times. So you can imagine if somebody like Buffett is making so many mistakes, then what about the other CEOs? Are they all pretending that they are not making any mistakes, or they're just not talking about them? My guess is they're not talking about them. They're just not transparent enough. We saw what happened with Nicola, right? We saw what happened with the. I mean, and I guess I should not really name the companies, but again and again, shareholders are fooled. Um, in matter of fact, I'm in tax business, so every now and then I'll deal with a startup, and I will be talking to the you know, whatever you want to call them, shareholders, business owners. These people are raising millions of dollars in investments. And when we start talking about a business, I'm like, there is no business here. You guys are just losing money. And they go back and they tell another rosy story and they raise another $1 million and $2 million. And they come back again and again and again. Um, I think raising money should not be the goal of any business. The goal of business is to make money. And if you're transparent, if you tell honestly to your stakeholders, including your investors, then maybe they're in a better position to guide you as to how to pivot that business, how to fix that business. Because if you're not honest with them, they're just going to assume that you know about your business more than they do, and they will keep investing. And at the end of the day, all that money, is just lost forever. Mr. Buffett also talks about Amazon 2021 letter, where he says everybody should take a look at that because that's a very honest letter. Very rarely large companies write such a letter. So, maybe I can review that letter in another video for rest of you guys who don't want to read the letter yourself. I capture about 10 mistakes that Mr. Buffett has mentioned in the letter. So I'm going to go through those because I think those are awesome that he's talking about them. So number one mistake is buying Berkshire Hathaway itself. He said, look, textile industry was dying industry. There was no way we could have done anything with it, but I kept working. I kept trying to make it work, but I just wasted too much time and money on it. It didn't really work out. I'll read you his direct quote. He said, if a far-sighted businessman had been present at our textile operation in 1965, he would have closed it down. Instead, I persisted in trying to turn water into wine. That was my first major capital allocation mistake, but far from my last. So we all know we're going to make a mistake. And today, when our portfolios are not doing that well, I would encourage you to go back and take a look at the companies that you own and figure out, are you making any capital allocation mistake? And if you are, why? And what is your plan to fix it? Such a critical thing. So, for example, I put a little learning lesson here. Buying a cheap stock doesn't make it a good investment. Fundamentals matter more than the price. Now, this this is based on Warren Buffett's strategy. Okay, I don't personally necessarily agree with it because there's all kind of businesses out there. Like for example, if there's a high growth company, most likely fundamental are not going to match. So I think the definition of fundamental is so broad. For example, I mean, what is fundamental? Is it cash? Like Warren Buffett really focuses on cash, like all the cash the company is going to generate in its lifetime. And then you discount it back to present day value. And that's the intrinsic value of a company. That's his formula of how he evaluates the company. And that works for many big businesses, which makes sense because Warren Buffett is not interested in buying in small businesses, right? So in his case, that logic does apply. But for a small investor like me, that doesn't work because these large companies just simply don't grow that fast. So I need to be able to buy smaller size companies that have a lot of room to grow. And when I buy them, very rarely I can buy them based on fundamental price. I often has to pay a premium for them. So I need to make a good calculation to figure out how quickly can a fundamental match with the value of that company. So good lesson to learn here. It's a good reminder, but just want to say that depending upon what kind of portfolio you have, what kind of businesses you buy, that might not necessarily be the right thing for us to do. But once again, Berkshire Hathaway is a very, very large company, and I'll share, their tax information and how big they are just in a second, so you kind of get an idea. But because they are a whole different beast, I don't think we should even try to mimic them. We can learn from them, but we certainly should not try to mimic them, at least in my opinion. And by the way, that brings up another good point before I go any further. Let me remind everyone that I'm a tax advisor. I'm not an investment advisor. So please don't mistake me that I can tell you what to buy, what to sell, when to buy, when to sell. Now, if you're looking for some coaching, you're looking for some help, you want to learn something, you want to understand finances, you want to figure out how your taxes work, you want to figure out how can you improve your financial outcome, I'm your guy for that. You can book up a consultation appointment. We can take a look at your overall picture and I can suggest you some ideas. But please, 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 please don't ask me what to buy, what to sell, if today's a good day to buy or today's a good day to sell. I'm not your guy for that. And personally speaking, neither is anybody else. I think if you should learn all this stuff, and it takes time. You're not going to learn it in one day. It's going to take you a few years to learn, and just learn and practice. And once you get really good at it, then go spend your money. Yeah, that's the way I like it, because most people, they just simply tell you what direction the market is going. If market is going up, they will say, oh yeah, everything is looking good. If market is going bad, they'll say everything is looking bad. But that neither are true, really. You got to come up with your own thesis. All right, enough about that. Mistake number two: delaying Geico turnaround. So Geico came into a picture after Berkshire Hathaway bought the textile business, which obviously struggled. And then they bought Geico, and Geico didn't do well for many years. Buffett admitted in his letter that he waited way too long to address the problem. And in 2019, he made Todd Combs in charge of Geico, and that's when things started to change. They modernized operations, improved risk pricing, optimized customer acquisition costs, and by 2024, Geico has become a shining story. It's making more money for Berkshire Hathaway than you can imagine. Now, had they not invested in Geico, today you would not be happy with Berkshire Hathaway performance. Geico has so much of to for in terms of contribution to Berkshire Hathaway. And I'll give you a direct quote here. Mr. Buffett says, "For too long, we allowed Geico operations to drift. That mistake became evident when our underwriting results were bad, and once they brought Todd Combs into the picture and he became the CEO of the company, then things started to change, and he's very happy with the performance." Something like that, I think. In maybe I changed the words a little bit. I think that's what he said. So, anyhow. Um, how does that matter to us? Well, I want you to think about people for a second. Okay. People are important in our life. Who do we hang around with? Who are we doing business with? Where do we buy our groceries? Who does our haircut? Where do we go for help? Who do we talk to about our taxes? Who do we talk to about finances? Who do we talk to about our legal problems? Who do we talk to about real estate? Who do we talk to about bank? Who is spending time on us in teaching us, helping us become better, right? Who is looking out for our best interests? Who is working harder? People. People are important, right? If you hang around with, you know, two dumb people, stupid people, or, let's just say not elevated people, then third stupid person will be you because you're hanging around in their company. But on the other hand, if you start hanging around with two great leaders, all of a sudden you will find yourself on that path as well. You become like them. That's just how it works. In Hindi, we have that famous saying, right? Kharbuje ko dekh ke kharbuja rang badalta hai. So that's the idea here. You want to find people who are willing to work hard, who have integrity, who are not trying to push you one way or the other. They are transparent with you. They are able to put everything on the table. They don't try to push you. I'll talk about from tax point of view because that's what I do. For example, I talk to some people. Their tax professional is very, very conservative. Something that they can do, they don't allow them to do. Okay, that's a problem. Then sometime I'll meet with a client where their tax professional is just, let's just say, completely illegal. Like they're asking them to do things that they should not be doing at all. Okay, both are wrong. right? The right path is somewhere in the middle, where a good tax professional should be able to show you, hey, look, you certainly should not cross this red line, but here are your options, and these are your risks, and these are your opportunities, and these are multiple ways you can navigate this. And at the end of the day, decision should be yours, right? Those are the kind of people that brings opportunity in our life, because if you don't do anything, then nothing changes. So when Todd took over Geico, he changed a lot. You guys remember in California, there were a lot of Geico offices. He shut them all down. Everything became online. Like, what the heck? What do we agent need an office for? Why do you need to have big offices? For what? You got to become efficient. Like, if I open up multiple offices and I'm start paying rent for $7,000-8,000 a month, my pricing certainly going to go higher. And when that pricing goes higher, guess what? Who pays for that? My customers do. So right now, let's say if I can charge somebody $500 for a tax return, if my cost goes up, I would have to charge them maybe $800, maybe $1,000 for tax return, because my expenses are higher. If I start traveling, in business class, then my expenses goes higher. But I think you start to get the picture, right? You're looking for people who are able to keep their costs down, people who are happy with reasonable salary, and in matter of fact, Mr. Buffett talks about that later on in the letter, where he brings up Japan. So I'll wait until I'm done with his mistakes, then we'll talk about Japan, because of that very reason. All right. So people are extremely important. So he put quite a bit of emphasis on that, find good people, don't delay it. If you have to pay for them, it's okay, because they are going to make you more money than you can imagine, because you have that relationship with them now. Okay. So important. Like, I'll give you an example. When we do a wealth summit, we often invite vendors to come join us, because they help us pay for some of that cost. I mean, that's a huge event. It costs us almost $100,000 to put that event together. And it would be nice if we can pass on some of that cost to these vendors. And sometimes people don't realize that, it's a very small fees to become a vendor at Wealth Summit. But what kind of access you're getting? You get to sit with me, you get to sit with Sanjeev, you get to sit with some of the best attorneys, and so many other people who are in our network. We do multiple lunches together, dinners together, we're having planning meetings together. What kind of relationships you're building? And during the Wealth Summit, I'll have people come up to me, oh, Deepak, I want to join it, I want to join it. I'm like, dude, you don't really get it, right? You don't get it. At the bare minimum, become a client, start a relationship somewhere. I'm not going to just let you go and present on the stage on day one. you know let's get to know each other first. Become a client. I know how your finances look like. I get to know what kind of integrity you have, what kind of person you are, what are you trying to do, and slowly you kind of get into the group. Anyhow, I think you get the point. People are so important. Then he talks about overpaying for certain businesses, and we have all made that mistake, right? Sometimes we buy bad, in matter, I would say sometimes we buy really great businesses for very bad prices, because we're buying story. I'll give you an example right now. And again, I want to remind everyone, whenever I talk about a particular company, I'm just understand the context. I'm just giving it to you at an educational purpose only. I'm not telling you to go buy that company, or I'm in, bull or bearish on a company or anything like that. So please don't see it in that way. So let's talk about Palantir or HIMS. When I bought them, it made sense because I bought them for super cheap. But today they're like high flying stocks. So when they come down by 30, 40%, I don't care. I'm still happy with them. But obviously somebody was buying them for a huge valuation. So when they buy it, obviously they are going to suffer. So it's important that we buy good businesses, but we certainly should buy them at the right price. And Mr. Buffett has done that himself. So if you think you bought something and you overpaid for it, then don't feel bad. Because Mr. Buffett says, I have made many mistakes in acquisitions, particularly in paying too much for businesses that later fail to deliver the returns I expected. So that brings up another important point for you guys. That is, well, what do you expect from your businesses? Do you have an Excel sheet that shows you what businesses do you own, what industry these businesses are in, what kind of earnings they're going to have this year, what do you expect them in the next year? I mean, you should have an Excel sheet of all of that number. And every quarter, when the earnings come back, you compare that. Okay. for two reasons. Number one, it forces you to look at their financial statements. And another reason is that if you're on the right trajectory. Because if their earnings are not improving, if their cash flow is not improving, if their fundamentals, their revenue is not improving, if their margins are not improving, these are basics of business. Then you need to dig a little bit deeper into that business. Do you really want to keep it, or is there a better opportunity out there? Is that a good business for our portfolio? All right, mistake number four, poor investments in public companies. As you guys know, that Mr. Warren Buffett likes to buy the entire company. He owns a lot of companies, fully controlled businesses, but he has so much cash coming out from those companies that he cannot find enough good companies that he can acquire. So what does he do with that cash? He invests them in public companies, just like you and me do. We buy stocks, okay? And he's saying, look, sometimes I just misjudge the business. And when I do, you would think then I'll sell it even at loss and move on. But no, I hold on to them for way too long. Have that happened to you before? Have you ever misjudged a business and then held on to it for too long? So Mr. Buffett said, look, focus on companies with durable competitive advantages and disciplined capital allocation. Don't buy something because of fear of missing out. Don't buy it because you got greedy because everybody else is buying, or you're fearful. Those, your emotions should be out. Just figure out, is this company going to last for next 20, 30 years? And are they going to continue to grow? And at what rate they're going to grow? And be willing to admit when you made a mistake and make a corrective action. Very, very critical. All right. And by the way, these notes are really for me, not for anybody else, because by recording this, hopefully I'll remember them. Then he talks about hiring wrong people. I kind of gave an example of what he talked about earlier with Geico, where Geico was not doing very well. But now he says, sometimes they hired managers to run different businesses, and these managers were not doing that good of a job, and we didn't fire them. So they didn't do a good job. That's one story. We didn't fire them. That's our problem. So the question I got to ask you is, how many people you're doing business with that you need to fire because they're not doing a good enough job? Why are you holding on to those people? And these relationships are financially very damaging to you. If you, for example, sometimes I talk to people in our group, and common comment I get is, hey, I learned more from this group about finance in last 1 year than I have learned in my entire life. Okay. Now, I'm not exaggerating. I think if you're part of the group, you probably have similar feelings here. Um, but it's so critical for us to be able to learn. So my question to these people is, why did you hang on to somebody else, some other tax guy for last 20 years, 30 years? Why? And the answer is usually one of the two. One answer is, oh, they're cheap. My price isn't, by the way, is very, very reasonable. So, but I will certainly not call myself cheap. So they're reasonable, but you know but the main point is they're saying, look, that guy had a best price, so that's why I'm like, it's not about a price. Let's say, I don't know, let's say, what's a cheap price? Let's say, call it a $300, right? I'm like, dude, $300 a year, that's what you really care about? What about everything else that you get in the entire year? How do you put the value on it? I think if I were to put all the value on all the information that we put together in 1 year, it's going to be well over $1,000 a year, right? I mean, most of you guys are professionals. You go to seminars and events. These seminars can cost $2,000-3,000 even for one seminar, and I do so many of them in a year. Some are in mini format and whatnot. So we try to deliver so much value. So he goes like, yeah, I agree. But it took me so long to learn that. Another reason people give me is they stick around because of some sort of loyalty to them. They go like, I just like the guy. He likes the guy. I mean, who cares about whether you like the guy or not? At the end of the day, what kind of impact are they having on your life? That's what matters. Okay. Keep them as a friend. I'm not saying, go fight with them or anything like that. The point I'm trying to make is, you need some impactful people in your life, whether that's your tax guy, whether you're finance guy, your attorney, your doctor, your dentist, your banker, your real estate, all the people that you do business with. You want to get the best in the industry. And when I say best, doesn't really necessarily mean that they are the most expensive, or they have they do the most marketing. That's not what I mean. Best means best for you, meaning they're looking out for your best interest. They're providing you more value than anybody else. Mr. Buffett says that whenever he hired the wrong people and they were there because of either price or because they had a loyalty or whatnot, and he didn't fire them, that caused a lot of problems. Two ways. Number one, it costed him financially. That means every year you have that person on your team, it's costing you money. And number two, it's emotionally damaging. It's taking you too long. You have too much of a headache, and it's just not a good experience for him. So he says, look for people who work for you, people who have a character, who are disciplined, who are long-term thinking. Those are the kind of people that you're looking for. And we as an investor, we should be looking for those kind of people as well. Then he talks about delaying leadership changes. Sometimes I was just too slow to replace the underperforming managers. I think that goes back to the same idea that I discussed earlier, so I won't spend too much time on it. Then he talks a little bit about capital intensive businesses, that he doesn't like those. He would rather put money into businesses like See's Candy or Coca-Cola, where it doesn't cost a whole lot to grow their earnings. But problem is, Mr. Buffett does not invest in technology. Technology oftentimes is capital intensive in the beginning, and then later on, it's very profitable. So once again, I would not necessarily agree with him on this particular point, but I see where he's coming from, because he does not invest in those kind of companies. He invests in companies like Coca-Cola and See's Candy. Okay, a lot of people think that Mr. Buffett likes to hold a lot of cash. He disagrees. He says, "I would rather not keep them cash, because keeping cash is losing money. I would rather invest them in some good companies." And I think one of the reasons why market is having a hard time is a lot of people reading this shareholder letter, and they're thinking, oh, Mr. Buffett is saying there's just not enough good businesses out there. But what they don't realize is he's talking about him. Like, when he goes into a business, he needs to buy a whole lot of business. He needs to spend a lot of money. He's looking at it from that point of view. I think there's plenty of businesses in the United States that are very, very good, and then we can buy them at a reasonable price. Then he talks a little bit about insurance industry in general. So he's saying, like, a lot of people right now might be thinking that insurance business of Berkshire Hathaway is very good. And by the way, this is also that transparency part that I was talking about earlier. That you look at the insurance business, I said, and you go like, oh my God, that company made what, almost like $5 billion? No, was it? What was that? Like, I think like almost $5 billion out of that, right? um, that's a lot of money. And you might be super excited with that. You might be really happy and all that. And Mr. Buffett said, wait a minute. The problem is we don't know how many losses we're going to have to deal with, because those losses haven't even hit our books yet. We're responsible to cover those losses for many, many years. So he's saying, look, insurance industry is very tricky. You got to make sure that your business is solid. A lot of insurance companies might not survive because they're not planning properly for the risk they're taking on. And lastly, like I said earlier, he talked about Japan. He said Japan. What he liked in Japan is that leadership is has the quality that he's looking for, and he knew that, but he waited way too long to invest in Japan. He got into Japan in 2019, and he's very happy with what he has done with Japan. And you can read more details about that. I won't go too much into it, but let me give you a quick overview. In 2024, 53% of Berkshire businesses saw earnings decline in 2024. 53. Okay. That means only 47% of the businesses were actually growing. Or at least saw the positive earnings. 53 were negative. Insurance investment, as I said already, that did very, very well. So Berkshire Hathaway clearly shows the importance of diversification. If you have a very well diversified portfolio, and even if you have one or two good winners in that portfolio, then overall you will most likely going to beat the market, kind of like what Warren Buffett has done. Mr. Buffett also talks about taxes. In last year, they paid almost $27 billion, 26.8 to be exact, in US taxes. That's more than any other company. Almost 5% of all US corporate tax revenue came from Berkshire Hathaway. So that's very, very impressive. And then he spent quite a bit of time, saying that, hey, look, I'm paying a lot. Don't go waste this money. Go use it wisely. So he was giving some advice to our politicians out there. Like I said, Mr. Berkshire Hathaway now owns 189 fully controlled businesses across various industries, and majority of capital is invested in equities, both private and public. So he's saying, look, focus on strong businesses with pricing power that can generate superior long-term results. So a lot of people think that Mr. Buffett prefers bonds or cash, but that is actually not true. He does prefer buying equities, and he still feels that United States is the best market for investments. So far, year to date, or for 2024, Berkshire Hathaway resulted in about 25.5% ROI versus S&P 500 was 25. So he beat it slightly, which is very interesting considering how volatile things has been lately. And since 1965, Berkshire Hathaway has compounded at almost 19.9% annually versus S&P 500 has been at 10.4%. So very long-term track record. And lastly, he leaves us with this. I will make more mistakes in the future, but as long as our hits exceed our misses, big Berkshire will prosper. And I think that applies to all of us. We will also make many more mistakes in the future as well, and we just need to improve our batting average every single year, and hopefully our hits will also exceed our misses, and we will prosper as well. So that's what I got out of the shareholder letter. I will encourage you guys to read it yourself and share your thoughts. Tell me what you like, what you didn't like, what did I miss. That would be very, very helpful. And once again, guys, if you need to reach out to me, just go to taxcodeadvisors.com. You can book a free discovery call and connect with me, and we'll get to know each other better. And if you like me, then let's do business together. All right, guys, just a couple of reminders. I do have a FBAR webinar coming up on March 8th. And then on March 8th, I will also be meeting with many of you guys in California. So we'll do a local meetup there. And then next weekend, which is what date it will be next weekend? Let's see. That will be on the 1st. On the 1st of March, I'll be meeting with many of you guys in Austin as well. So if you want to join any one of those meetups, then please connect with me. All right, guys, thank you so much. Once again, my name is Deepak, and I'm a tax code advisor, and I'm waiting for your next phone call. So just reach out to me via tax